So basically looking at this component, remember we mentioned that we'll be talking of sources of income, right? Among the sources of income that we mentioned, we'll also be having, this is what we normally refer to as employment income. So as we are starting this, basically, we understand that, of course, there are so many amendments that have been done, also in relation to our act. So you're talking about taxation of employment income. So you're saying that this is amongst the sources of income that we'll be looking at. And I understand majority of us probably you might be asking with the changes, of course, of within this Finance Act 2023, how will it affect us more so whenever we're talking about taxation of these sources of income, like employment income. Recall, like what you are going to be tested on, it is in relation to the previous financial year. The previous financial year, or rather which was the last financial year. The last financial year, basically, it is what? 2022. So for the purpose of exams, anything that you're going to be tested on in relation to tax, you'll find that they are going to base it on the financial year, which is 2022. The Finance Act 2023, you'll find that for those who will be doing probably tax, whichever course that guys will be doing, you'll find that this will affect us in, for those who will be doing the papers in 2024. But for now, you'll find that all that we'll be doing, literally, it is going to be based on the last financial year. The last financial year, basically, you're talking of what? 2022. So as we're also introducing taxation of employment income, it will be very vital to understand that when we reach there, whenever we'll be looking at this aspect of the table, that is, of course, the individual graduatory scale rate, our focus mainly will be on the scale that we were using on the last financial year. Remember, like the scale has been adjusted, this financial under the Finance Act. So looking at employment income, at least all of our, majority of us basically are literally employed in whichever way. So as you're providing this service to, of course, your employer, there's that reward that you're going to get as at the end of the day. So this reward is what you're referring to as an income. And where is the origin of this reward? The origin of this reward, literally, it is from your employment, right? You've rendered a service to employer. After you've rendered a service to employer, what employer will do, the employer is going to reward you. So in this case, the reward that you're getting from your employer, either on cash or non-cash, in this case, you'll find that there are some which will be subjected for tax purposes, whereas there are others which are not going to be subjected for tax purposes. So the whole idea here, what I want us to look at, basically, it is simply this component of the reward that you are getting from our employment. So introducing this case, my good students, you can just put it down and say that income tax is imposed on the gains or profits from any employment or services rendered. Income tax is imposed on the gains or profits from any employment or services rendered, or services rendered, or services rendered. Very important to know that. Very important to know that. I repeat, we are saying that income tax is imposed on the gains or profits from any employment rendered, from any employment rendered, from any employment rendered, from any employment rendered. So other dash also on the same, we can literally note and say that monthly pay is the income from employment. The monthly pay is the income from employment. The monthly pay, it is the income from employment, which may include cash and non-cash benefits, which may include cash and non-cash benefit. So what should come clearly here is that at any given point in time, when you're talking of this reward will include both cash and non-cash benefit. That is very important to understand. So ideally, that will take us to the cash benefits. Let us analyze the rewards that you're talking about. When you're talking about cash benefits, what will it entail? The cash benefits. What will cash benefits entail from employment income? Number one, cash benefits will comprise of, this is very important because remember, like more so when we are starting with these concepts of course, other taxation of our sources of income, you realize that it will be very important, and that will be the only trick, right? This case, Mwalimu is giving us a trick. Like for all these statements that you'll be preparing, it will be vital for you to first of all understand the concept that is building this statement. The moment you are able to understand the whole building blocks of this concept, it will always be very easy for you to handle it. And that's why in each and every component, we'll always start with the theory part. Let the theory part build a foundation so that when you start working it out, it will be very easy. And you're going to be my witness. Like many a times, we'll always be referring to the theory that Mwalimu is giving us now. So you're talking about the cash benefits. In this case, number one, we can talk about aspect to do with receipts from employment. Number one is receipts from employment, right? Talk about receipts from employment. Receipts from employment. Talk about receipts from employment. Receipts from employment, of course, will be what? Such as what? The salaries that you're getting, right? Such as leave pay that you'll always be paid. Such as overtime. All these are receipts from employment, which we'll be having as number one form of cash benefits. So of receipts from employment. Number two, talk about cash allowances. Talk about cash allowances. Talk about cash allowances. Cash allowances, such as housing, entertainment, such as housing, entertainment, hardship, etc. Number three form of cash benefit you can mention is expenditure incurred by the employee. Expenditure incurred by the employee, which is paid for by the employer. Expenditure incurred by the employee, which is paid for by the employer. Expenditure incurred by the employee, which is paid for by the employer. So like, for example, in this case, you'll find that maybe today I've spent, say, like maybe aspect of purchasing groceries, probably at my place. And in this case, what will happen? Employer, probably which is in Darasa, probably I've been employed in Darasa, and Darasa will decide to pay for me all this, or rather reimburse me the amount that I've spent in relation to purchasing of these groceries. So you'll find that at the end of the day, this somehow cash benefit that we are earning, cash benefit that probably in this case I'm earning. The other case here that we can talk about the aspect of cash benefits, we're here for per diem. Per diem is literally daily allowances. So we're reading about per diem. Per diem. These are literally daily allowances that we are referring to them as per diem. So currently standing at 2,000 per day. So we are talking of, that is of course a set limit. We'll be looking at it so later on where we'll be having a set limit on the same. So right now just have what the per diem. Per diem is literally, talk about these literally daily allowances, right? Granted basically to employees, of course, out of work assignments. So that is what you're referring to as per diem. So that is in relation to the cash benefits, which is very important. Number two, which is also very vital, talk about non-cash benefits, right? Talk about non-cash benefits. Because you say that I'll be having cash benefits and non-cash benefits, right? Let us dissect non-cash benefits. What will you be having in relation to this? So I'm having here non-cash benefits, right? Non-cash benefits. You'll find that, yes, these are the benefits that we are getting from our employer, but literally, they are not in cash form. They are not in cash form. So this is what I want us to analyze. So the non-cash benefits, you can start with number one, facilities, right? Talk about facilities. Facilities. We can explain facilities and mention something. So briefly on this, we can mention and say, and as I've said, my good students, is the concept that you're studying now is not only for exams. I'm really insisting that whatever that you're doing now, it is not only for exams. Probably towards the end of this year, or rather before June, a person will basically approach you, your friend, your family member, to assist him or her to file the returns. And probably this person, of course, is earning somewhere. In this case, it would be upon you basically to analyze the benefits that he was earning so that you can be able to assist him to file his personal returns. So that's what I'm saying, like this context that or the concept that you're studying today is not only for your exams, but you'll find that it is very, very much practical. So talk about facilities here. Facilities there, I've just mentioned something brief and say that these are benefit or advantage enjoyed. This is a benefit or advantage enjoyed by the employee. Benefit or advantage enjoyed by the employee. In connection with the employment. In connection with employment. In connection with employment. With connection with employment. I repeat the statement. Or advantage enjoyed by. At that point, we are saying that, for example, in this case, you will find that many a times probably you're working somewhere, right? And in this case, what your employer will do, your employer will provide transport. You'll find that, yes, this is a benefit that you're enjoying, so it is non-cash. So that's why we're saying that this is a benefit or advantage enjoyed by the employee in connection with employment, such as free transport, right? Talk about maybe a free company product, etc. Majority of you probably you're working with hoodies, the company's hoodies, right? You're having those small bottles for the company. These are benefits that you're literally enjoying, right? So we're saying that basically, in that case, we're going to take them as what? As basically non-cash benefit. The vital element that you should understand here is that this one is capped. So just below what you've written, you can add and say that the minimum taxable aggregate, value of a facility is 36,000 shillings. The minimum taxable aggregate value of a facility is 36,000 shillings per annum. Is 36,000 shillings per annum. That is to say, at any given point, whenever I'm having excess of 36,000 is going to be taxed. And later on, worry not about that one. We are going to dissect it as we proceed. Number two, non-cash benefit. Talk about servants here, my good students. Talk about servants. Talk about servants, right? Talk about servants. And whenever we hear of servants, literally it is wide. We are looking at probably the employers provided with cooks. The employer probably has provided you with the aspect of security personnel. All these are basically servants, right? So briefly, we can mention and say under servants that where the employer has provided servants to the employee, such as cook, watchman, etc. The taxable value of the benefit, is the actual cost to the employer. The taxable value of the benefit is the actual cost to the employer. Very important to note. Excuse. Number three, talk about services. My good students, talk about services. I know you're wondering, when you're talking of services, basically what are we looking at? So services, basically you'll find that at this point, we might talk about electricity and water, right? At this point, probably the employer is paying for us electricity, the employer is paying for us water. All these are non-cash, right? But they are benefit that you're getting from employment. So that one is also very important. In addition to that, e.g., in this case, you're seeing maybe water and electricity. Water and electricity. Because the other item that we're also looking at, that one is also service. Number 4, telephone services. Telephone service. And these are some of the key items that you must always be able to understand, because you'll find that they will affect us directly as we proceed. So telephone services. Telephone services, we can often say that where the employer has provided telephone services, where the employer has provided telephone services for the benefit of the employee, where the employer has provided telephone services for the benefit of the employee, the taxable value is 30% of the telephone bill paid. The taxable value is 30% of the telephone bill paid. For example, my good students, in this case, probably, maybe the company has provided, or rather, my bill maybe monthly for telephone is usually say like 20,000, assuming. So in this case, you'll find that the benefit that I'm going to enjoy as a person, you'll find that I'll be taking 30%. So this will be the telephone benefit that you are getting. And this is very important because it will affect us directly in most of the questions that we will always be looking at. So we are talking about telephone services, but telephone services, you are saying we are going to take what? The 30%. We're going to take the 30%. Very important. Talk about the other point here, which is furniture. Talk about furniture. I want to be very slow on this so that you guys should be able to grasp it, because I'm very sure that once you're able to understand this, moving forward, things will be very, very easy. Talk about furniture. What about furniture here? You can mention and say that in case the employer provides furniture for use by the employee, in case the employer provides, in case, we are saying that in case the employer provides furniture for use by the employee, in case the employer provides furniture for use by the employee, the taxable value is 1% per month. The taxable value is 1% per month on the cost. Kindly mark that very clearly. We are saying that the taxable value is 1% per month. Per month. Underline that word, per month on the cost. So that is to say, probably I've been provided with a furnished house. And the cost of furniture, maybe you are talking of, say, like 500,000, the cost of furniture. So the benefit that me as an employee, the one that I'm going to earn, we are saying that I'm going to take 1% times maybe the number of months that I was having that furniture. If it is 12 months, if it is 6 months, literally we are talking of what? 1% per month. So we multiply by the cost. This is what you are going to enjoy as a benefit. This is what you're going to enjoy as a benefit. The other point here, we can talk of the aspect of car benefit. So number 6, talk about car benefit. So about car benefit. And for car benefit, it is very ideal that you should always be able to understand how we normally tend to read, of course, the schedule I'm going to show you guys. So in this case, you can note and say that where the employer has provided a car for the private usage of the employee, where the employer has provided a car for the private usage of the employee, where the employer has provided a car for the private usage of the employee, the taxable benefit shall be the higher of, the taxable benefit shall be the higher of the taxable benefit shall be the higher of quantified amount on the basis of CC rating, the quantified amount on the basis of CC rating, right? On the basis of the CC rating, quantified amount on the basis of CC rating shall be the higher of the quantified amount on the basis of the CC rating. The CC rating, of course, the CC rating of the car, and slash or the prescribed rate of the benefit, which is usually 2% per month on the cost. 2% per month on the cost of the motor vehicle. 2% per month on the cost of the motor vehicle. 2% per month on the cost of the motor vehicle. This is what I want to basically guide you guys. Check this one out, and I want you to be very, very keen on this. In the event that you're having a question, kindly you should ask. Look at a good example of this. Let me share this. Just a moment here. I want to share this so that you should be able to understand, because as at the end of the day, you'll always tend to be given anyway. I'm just sharing this with us. You see, whenever you're talking of the quantified amount of the CC rating, I want you to check this. You see this case, the prescribed benefit rate of motor vehicle. This one will always be given in your exams. The prescribed benefit rates for motor vehicles provided by the employer, right? So what you are doing here is that I'll be comparing this case, my good students. I will be comparing the CC rating. For example, maybe I'm having a car with a CC rating of say 1600 cc. 1600 cc, you'll find that it is going to lie in between this range, 1501 and 1750. So that is to say the CC rating for the whole year, I'm talking of 69,600. 69,600. 69,600. So that will be our CC rating, right? 69,600, which you can clearly see it there. Depending on the CC rating, at this point, you just assume that maybe I'm talking of what? 1600 cc. So you'll find that here I'm talking of the CC rating for the annual is 69,600, whereas monthly CC rating is 5,800. So in that case, you are going to compare with what? We are going to compare with the 2% per month on cost of the motor vehicle, assuming the cost of this motor vehicle was 2 million. So we are going to take 2% per month. If at all I'd enjoy that motor vehicle for the whole year, that should be times 12. So that as at the end of the day, we are going to talk of our benefits to be the 2% here, right? Times 12, which would give us 24%, times 2 million to give us a value of 480,000. So what will we take as our benefit? What will we take as our benefit? The benefit that we're going to take for tax purposes, I'm going to take the higher of these two, which the higher of these two is 480,000. So in the event that you realized you're having a problem, and in this case, the employer has provided a car to the employee, you should always be able to have in mind that you'll be required to compute what? The taxable benefit. And for taxable benefit, this is how we're supposed to work it out. The quantified amount on the basis of CC rating, you compare with the 2% per month on the cost. So whichever is higher is what you are going to take as what? As our benefit. But the question will arise, my good students, what if this car is not purchased? What if I have hired this car, or maybe this car is leased? How then are we supposed to compute the benefit of this employee? Just below what you've written, we can note something and say, just below what you've written, we can note something and say that. However, if you're done with this, if you're done with this, if you're done with that, if you're done with that, just slowly take your time, take your time, take your time. Take your time. Mercy, are we on the same page? Mercy, are we on the same page? Anto, Dom, Hope.
Tuko pamoja.
Tuko pamoja?
Yeah.
Great. Dominic, are we on the same page?
Yes, Mwalimu.
Great. I hope Mercy, I hope we are all on the same page. So, looking at that case, you're saying that just below that, you can mention something and say that, however, where the car is hired or leased, however, where the car is hired or leased from a third party, however, where the car is hired or leased from a third party, the taxable value is the cost of hiring or leasing. Kindly make sure that that sinks in very well. We are saying that in the event that maybe this car is hired or maybe this car is leased, the benefit that you're going to enjoy, in this case, it will be what? The cost of hiring or the cost that you're going to spend in leasing that car. Very important to note. Very important to note. Now, unless any other question on that, we proceed to the next benefit, which is housing benefit. Also very important. Let's proceed to the next benefit here, which is housing benefit. Always very important as well. Housing benefit. So allow me to erase this point. So that is number 7. Talk about the housing benefit. So we are having housing benefit here. Housing benefit. Number 7. This one is also very vital because you'll find that it will literally guide us all through as we proceed. So at what point will I be having this benefit? You find that many a times probably the employer may decide to give us a house, or maybe the employer may decide to house us, or maybe even paying for us a rent. So in this case, we'll be expected to compute the housing benefit. So just below our housing benefit, we can mention and say that this arises where the employer has provided. This arises where the employer has provided accommodation or means of payment. This arises where the employer has provided accommodation or means of payment, or means of payment, or means of payment, or means of payment. Or means of payment. So for housing benefit, we find that our employees will be categorized as follows. So in this case, for housing benefit, you'll find that we are going to categorize our employees as follows. And this will always be our guiding map. So now about number 1, we should always be talking about that number 1, we normally tend to talk about ordinary employees. Ordinary employees. Okay. Ordinary employees, which at the same time we are referring to them as full-time service directors, full-time service directors, full-time service directors. Number 2, we can talk of, this is basically, of course, non-full-time service directors, non-full-time service directors. And number 3, we can talk of agricultural employees. Agricultural employees. So when you are talking about housing benefit, it will be very vital for you to understand which type of employee are you dealing with. That will be very vital for you to understand which type of employee are you dealing with. Okay, let us start by analyzing the housing benefit for the first form of employee, ordinary employee, right? Or in this case, you're referring to them as what? Full-time service directors. full-time service directors. Let us start with this first. Let us start with this and analyze it very keenly. We can mention and say that the housing benefit is determined. The housing benefit is determined. The housing benefit is determined. The housing benefit is determined as a higher of 15% of the employment income, 15% over employment income. That is the total gains from employment income. Total gains from employment income. We are going to compare this. My good students, with what? With the market rental value of the house. The market rental value of the house, right? So we are saying that we are comparing the higher of the 15% of the total gains from employment income. We compare with the market rental value. Whichever is higher, we are going to less the employees' own contribution. The employees' own contribution. Because probably out of what we are having, probably there is an amount that I'm paying from my pocket, or rather from my salary. So we compare the higher of 15% of the gains from employment. We compare it to the market rental value. Whichever is higher, we are going to deduct, of course, whatever that this employee is paying from his own pocket. Very important, very important, very important. After that case, you can look at another concept here, which is basically talk about non-whole-time service director. And it is at this point that I want you guys to get the distinguishing factor. It's at this point that I want you always to get the distinguishing factor. So about non-whole-time service directors. Non-whole-time service directors. Non-whole-time service directors. Number one, it will be very important for you to basically understand how can you say, or rather in this case, how will you know that this is a non-whole-time service director? So below that, maybe you can just mention something brief and say that. And that we cannot and say that non-whole-time service director / directors are the one who controls non-whole-time service directors. They control more than 5%. They control more than 5%. They control more than 5%. They control more than 5% of the shareholding. They control more than 5% of the shareholding of the company. They control more than 5% of the shareholding of the company. That is one way that you can say that this is an non-whole-time service director. Another way that you can identify that this is an non-whole-time service director, my good students, it is a case whereby you'll find that this person has not dedicated most of his time to the aspect of what, to that work. Maybe he's usually there, maybe once in a while, meaning that this person has not dedicated most of his or her time to the work. So these are basically the distinguishing characteristics, or maybe identification, that you can clearly say that these are non-whole-time service director. So the question would be, how are we going to determine the housing benefit of non-whole-time service director? To determine the housing benefit of non-whole-time service director, this will be easy. How will you go about it, my good students? Come and identify the 15%. You take the higher of 15% of the total income. 15% of the total income. Whenever you're talking of total income, you're talking of both employment and other incomes. Look at this case. For whole time, we are only considering total employment income, or rather the gains from employment income. But for non-whole time, we are talking of total income. And in this context, total income will include both employment and other incomes. We compare that with what? We compare that, of course, with the market rental value. Market rental value. We compare that with the market rental value. Whichever is higher, we less what you are referring to as what? Employees' contribution. Employees' contribution. So key element is on the 15% of what? That is very key to identify. Like for non-whole time, we are talking of what? 15% of the total income. And in this context, total income refers to what? Both employment and other incomes. Kindly always have that in mind. Always have that in mind. Always have that in mind. So after that case, we should proceed to the next item here, which in this case, you're talking about agricultural employees. Agricultural employees. Agricultural employees. We mentioned something on that. So in this case, of course, the housing benefit is going to be determined by taking so this is agricultural. I'm looking at my space here. So agricultural, this is very easy. We are going to take the 10% of employment income. We take 10% of employment income. 10% of employment income. We less owner's contribution or employees' contribution. Employees' contribution. So we are saying that at this point, we are taking 10% of employment income with less employees' contribution. With less employees' contribution. That is very vital. That is very vital. And if there is a question, this is the best time to ask. This is the best time to ask if there's a question. If there's a question, this is the best time to ask.
Mwalimu.
Yes, Masi.
Are police officers charged?
Yeah?
Police officers.
Now
that they are housed by their employer, are they taxed?
Yeah, there's always an amount that they normally tend to pay, by the way. Right? In this case, these are benefits that they are earning. So there's always an amount. You'll find like for discipline forces, there's always a criteria that they normally tend to pay. And that's why you'll find that also for them, they don't pay normal NHIF. That is for the discipline forces. There's always an amount that they normally tend to pay specific component. But it is considered as a benefit. Is that okay, Mercy?
Yeah, okay, thanks.
Yeah. So you'll find that for discipline forces, basically, there's always that amount that they normally tend to pay, or rather, if you check their payslip, there's always a specific amount for housing, as much as they are housed, but there's an amount that is always kind of taken, or rather kind of deducted in on their case, as basically, of course, they normally tend to enjoy, if at all you can compare. So these are what you are having, and very important for us to always have this in mind. So you'll find that, my good students, once you've got some of these elements, when we'll be going to a question, it just be a matter of us identifying which case are we dealing with. And that case, it will be very easy for us to always treat it. So that will take us to number 8, fringe benefits. Fringe benefits. At times, you might be asked to describe what a fringe benefit is. How will you do that? So you're having number 8, these are fringe benefits. Fringe benefit. So for fringe benefit, basically, it is a very ideal for us to understand that maybe if I was to explain it before even you write it down, you'll find that this is a form of benefit that normally comes about whenever we are talking of loan, right? Say, for example, this case today, maybe I want to take a loan, right? If I want to take a loan, I'm going to approach my employer, which is probably Mdarasa. I'm going to approach Mdarasa to give me a loan, being my employer. So in this case, Mdarasa will or can give me this loan. Maybe I need, say, like 1 million, right? And the Mdarasa will give me this loan at an interest rate of, say, like 5%. If at all we compare with the market rate, if at all I was to take the same loan, probably in our commercial bank, I could have gotten this loan at a rate of 15%. So this is where the fringe benefit will come in play. The fringe benefit will arise as a result of the difference between the market rate that I can get this loan compared to the employer's rate, which Mdarasa is giving me. We multiply by the loan amount here. We multiply by the loan amount. So this is what we are referring to as the fringe benefit. But actually, in this case, you'll find that fringe benefit is always taxed on employer. It is not even going to affect the employee. It's not going to affect the employee. It's going to be taxed on the employer. So literally, these are what the fringe benefit basically, if I told you to describe it in a very simple term, it is that benefit I'm going to enjoy. Of course, the difference of the aspect of the loan rate comparing the market and whatever that my employer is giving me. So that is a component that we're going to refer to as what? As fringe benefit. So maybe you can just mention and say very briefly that a fringe benefit arises when employees are granted loans. Fringe benefit arises when employees are granted loans by the employer at an interest rate that is lower than the prescribed /market interest rate. I repeat the statement again. We are saying that fringe benefit arises when employees are granted loans by the employer at an interest rate that is lower than the prescribed /market interest rate. And this is what Mwalimu was explaining here. This is what Mwalimu was explaining here, right? We are talking of the market rate minus the employer's rate times the loan amount. This is what will give us what? Our fringe benefit. We've agreed and said that this benefit is not taxed on the employee. This benefit is not taxed on the employee, but rather it is taxed on the employer. So you'll find a question whereby you might be asked to compute other form of tax, where in this case you'll find that for us to determine the fringe benefit tax, if at all you're to determine the fringe benefit tax, FBT, fringe benefit tax, we are going to take my fringe benefit, the one that we've earned, we multiply by the corporation tax rate. We multiply by the corporation tax rate. This will give us our fringe benefit. That will give us our fringe benefit tax. Fringe benefit tax, we are saying we are taking our fringe benefit times the corporation tax rate, the corporation tax rate. And we've agreed it is taxed on the employer. It is taxed on the employer. Very vital information that you guys are having. Very vital information that you guys are having. To that point, we can proceed to the next item here, where we are talking of course, the other item we can talk of gifts and rewards. Talk about gifts and rewards. So we are having number 9, gifts and rewards. So this is gifts and rewards. gifts and rewards. Talk about gifts and rewards. So what about these gifts and rewards? This is very important that we should be able to understand. This is very important that we should be able to understand. We can note and say that generally, gifts are not treated as taxable income in the hands of the recipient. That's the first vital information that you should be able to understand. Generally, gifts are not treated as taxable income in the hands of the recipient. In the hands of the recipient. In the hands of the recipient. But you'll find there's a rule to this. There is a guideline to this, right? For continuation, we are saying that this rule applies to personal gifts. This rule applies to personal gifts. This rule applies to personal gifts. Say, for example, maybe I'm having maybe Hope or maybe Mercy, Dom, Anthony. You guys are my friends. So today maybe I've decided like, let me give you a gift, right? So these gifts, as we are looking at it, this is a personal, right? It applies to basically from a personal perspective, right? Whereby we are looking at it in terms of friends to friends. In the event that you'll find at any given point, I am receiving a gift as a result of me rendering a service somewhere, then that gift is taxable. So just another sentence below what you've written, you can note something and say that, however, if any gift is received, by virtue of employment for services rendered, we're saying, however, if any gift is received by virtue of employment for services rendered, it is a gain from employment. It is a gain from employment. It is a gain from employment and is taxable. And it is taxable. And it is taxable. And it is taxable. And it is taxable. A good scenario, I can basically we can look at it in this case. This is a conversation that has always been there amongst accountants. At times, you normally look at them and you just laugh, right? Maybe if I may ask this question, Tony. You've gone to a very good restaurant. There's this very beautiful waiter and very respectful. This waiter literally, she has served you very well. And you decide like, you know what? Take this tip. Take this tip. The question is, Tony, how would you consider that tip? Is it a form of taxable, or in this case, you might prefer it not to be a taxable element to this waiter? Tony, Antro, what do you think?
I think it will be a taxable benefit.
Why?
Because I'm giving out this tip for the service that the lady has provided, but that is her responsibility, the reason why she has been employed. So she is in employment to provide that service. So by virtue of employment for providing that service, which was commendable, I provided a tip, therefore it will be taxable.
Very good. That is very, very good. So you'll find that in this context, that tip that you're giving that waiter, this tip should be taxable, right? There's a tax, because as at the end of the day, if it wasn't for maybe her being employed there, she couldn't have earned this. So in this case, we find that it is in line with her duty. So this is such gifts. You see, gifts and rewards. Such is taxable. Such is taxable. Such is taxable. So that will bring us to the end of basically what you are looking at as a cash and uncashed benefits. Very important concept that will literally be our guiding path in everything that we'll be doing henceforth in relation to employment income. So once you've mastered that, I want us to jump to basically allowable deductions against employment income. Allowable deductions against employment income. Allowable deductions against employment income. That is what I want us to look at right now. Allowable deductions. Yes, please.
Before we move forward.
Yes, Mercy.
I have a question.
Please ask.
So, like for the company I work for, during Christmas, they give us vouchers. So should that be added as part of income?
I was waiting for that. That is taxable. That is a taxable component. That is a gift that you are getting. That voucher you are getting for the company appreciating you for the services that you've done all through the year. It is not a personal, it's not, if you are not within that company, you could not have earned that gift. So therefore, it is supposed to be taxed. That is a taxable, that's a taxable amount, or rather that is a taxable income in your case.
Okay, thanks.
Should you report to KRA or should you keep quiet, Mercy?
No, I didn't say anything. I didn't say
should you report? Even Money hasn't said anything. Yeah. So always that is always of course that should be taken as a taxable component, because if you are not there, then you could not have earned that voucher. So that will take us to basically allowable deductions against employment income, and that this is also very vital. Allowable deductions against employment income. Allowable deductions against employment income. So you'll find that once you are able to understand these concepts more so theoretical, whenever we'll be looking at these questions, you'll find that it will always be very, very easy. So talk about allowable deductions against employment income. Allowable deductions against employment income. Allowable deductions, in a sense, that whenever you're having these basically deductions or maybe these expense, then they should be deducted from your employment income, so that if at all you are supposed to pay, say like 200,000 as your as a taxable income, then the deductions that you'll be having is going to reduce this value that should be taxed, so that it might reduce this value up to say like 140,000, for example. And literally all this, you'll always find them, of course, in our, whenever we'll be having our P10, the form that you normally tend to use in filling all these, you'll always find them there. So in this case, let us talk about something on that, and we can mention and say, number one, we're having subscriptions to professional associations. Subscription to professional associations, such as ISPAC. Subscriptions to professional associations such as ISPAC. So you'll find that, of course, in this event, me being a member of ISPAC, of course, there's an amount that I normally tend to pay as a subscription fee annually. So whenever I'm preparing my, of course, my taxable income, then allowed to take into consideration this subscription that I've paid, so that if at all my taxable income was 200,000 and my subscription fee is say like 11,200, therefore I should deduct that value to reduce what is going to be taxed. That's what we are talking of, basically allowable deductions. Number two, talk about contribution to registered home ownership savings plan. Contributions to registered home ownership savings plan. HOSP. Contribution to registered home ownership savings plan. That's what you're looking, that's what you're referring to as HOSP. Contribution to a registered home ownership savings plan, HOSP. So we are saying that contribution to registered home ownership savings plan, subject to a maximum of 96,000 shillings per annum. Subject to a maximum of 96,000 shillings per annum. Subject to a maximum of 96,000 shillings per annum. That is to say, in the event that it has exceeded 96,000, the excess value is not going to help me to reduce whatever I'm supposed to pay. The excess value is not going to assist us to reduce whatever that we are supposed to do, whatever that you're supposed to pay. That is very important to note. That is very, very important to note. That should take us to basically the other point, number 3. That should take us to number 3. Contribution to a registered pension scheme. Contribution to a registered pension scheme. Contribution to registered pension scheme. Contribution to a registered pension scheme, subject to a maximum of 240,000. Subject to a maximum of 240,000. Subject to a maximum of 240,000 per annum. The other item you're having, interest on loan borrowed to purchase a house. Interest on loan borrowed to purchase a house. Interest on loan borrowed to purchase a house. This case, we are talking about mortgage interest, right? These are mortgage interest. So interest on a loan borrowed to purchase a house, subject to a maximum of 300,000 shillings. Subject to a maximum of 300,000 shillings per annum. All these are on a per annum basis. Subject to a maximum of 300,000 shillings per annum. Subject to a maximum of 300,000 shillings per annum. That should take us to another item here. That should take us, of course, to the other item. Direct expenses incurred by the employee in connection with employment. Direct expenses incurred by the employee in connection to what? To employment. Direct expenses incurred by the employee in connection with employment. In connection with employment. In connection with employment. For example, we are talking of traveling and entertainment expenses for salesmen. Traveling and entertainment expenses for salesmen. The other item you're talking of, cost of tools and equipment if the employee provides his own. Cost of tools and equipment if the employee provides his own. Cost of tools and equipment if the employee provides his own. The other point you're talking of, cost of special clothing. Cost of special clothing. Cost of special clothing, provided if not provided by the employer, or other cost of special clothing if not provided by the employer. Cost of special clothing if not provided by the employer. If not provided by the employer. If not provided by the employer. That is very important for us to basically understand. So whenever I'm having such, those are basically items that will assist me to reduce whatever I'm supposed to report as income to be taxed. That's why we are referring to them as what? Allowable deductions against employment income. Allowable deductions against employment income. Very key and very important. That will take us to the other point here, which we are referring to as non-taxable employment benefits. Non-taxable employment benefits. Non-taxable employment benefits. Non-taxable employment benefits. So what should we understand here? These are the benefits that even if I am getting from my employer, they are not supposed to be taxed. These are benefits that even if I'm getting from my employer, they are not supposed to be taxed. Example, or in this case, we can start with number one, talk about facilities. We had mentioned this one earlier on, and that's why I mentioned that we'll be looking at them further. Facilities. We mentioned them as part of non-cash benefits. We mentioned this as part of our non-cash benefit. But right now we are looking at non-taxable employment benefits. That as much as I'm having this, they are not supposed to be taxed on me. So on this, you are saying these are benefits granted to employees. These are benefits granted to employees whose aggregate value is less than 36,000 shillings per annum. These are benefits granted to employees whose aggregate value is less than 36,000 shillings per annum. Whose aggregate value is less than 36,000 shillings per annum. Number two, talk about school fees. Talk about school fees. Talk about school fees. Talk about school fees. What about school fees? What about school fees? It is very important for us to know this. What about school fees? We can mention something and say, that if payment by the employer is for the employee or his dependents, if payment, you're saying that if payment by the employer is for the employee or his dependents, if payment by the employer is for the employee or his dependents, it is an non-taxable benefit. It is an non-taxable benefit. It is an non-taxable benefit, provided that it is taxed on the employer. I repeat the statement again. You are saying that if the payment by the employer is for the employee or his dependents, it is an non-taxable benefit, provided that it is taxed on the employer. So, yes, in this case, the employer is paying the school fees for myself or even my children. What is happening here is that I am not, or rather, we are not going to consider it as our income on our end, if and only if it has not been allowed in the books of the employer, meaning that it is taxed on the employer. It is taxed on the employer. That is the only point where we are going to take it as what? As an non-taxable benefit. But if it has been taken as an allowable expense in the books of the employer, by saying taking it as an allowable expense, the employer has stated in his books that this amount I have paid Anthony as part of the benefit. Therefore, that value is taxed on that value will be taxed on Anthony, because the employer has literally removed his liability and say that, I've paid school fees for Anthony. So therefore, in this case, this is a benefit that I'm giving Anthony. So it is not on me. But if the employer has paid a school fees on you, or maybe your dependents, but it has not been deducted in the books of the employer, That's why we are saying it is not taxable. That's why in that case, that is when it's going to be taken as what? As non-taxable, or rather as non-taxable benefit on your end. Number 3, we're having medical benefits here. Medical benefits. Very vital for us to understand the concept of medical benefits. Very vital for us to understand the concept of medical benefits. So about these medical benefits, my good students, we can often say that these are non-taxable benefits if provided. These are non-taxable benefit if provided. These are non-taxable benefit if provided under a medical scheme which is non-discriminatory. These are non-taxable benefits if provided under a medical scheme which is non-discriminatory. So we are talking of non-discriminatory. At what point is this going to be non-discriminatory? Where in this event you are told that this medical scheme is for all employees, non-discriminatory. Therefore, it is not going to be taxed as much as it is our benefit. But if it is discriminatory, where we are saying that provided for senior employees only, provided for senior employees only, provided for senior employees only, discriminatory. Get the difference. For all employees, non-discriminatory, therefore non-taxable. But if it is for specific class of employees, then that medical benefit is supposed to be taken as part of our other benefits and taxed. Very important for us to know that. The other point you can note is passages.
A question.
Yes, Anthony.
Okay, for example, where the medical scheme provides insurance or medical cover for all the staff, but the allocation is, let's say, discriminatory in this case, maybe for junior staff versus senior staff, you find that the allocation for the senior staff is much higher compared to whatever is allocated for the junior staff. Is that
is not discriminatory, because you'll find that in this case it is provided to all employees. Whatever that is happening here is that the aspect of allocation is different, in a sense that at any given point, even the bonuses, of course, it will always be based on the level that you are in the organization. That is, of course, in relation to the ranks in the organization. But what is happening, the reality is this benefit is provided to all employees. The only difference is allocation. So in such an event, Anthony, that is non-discriminatory. Anto, are we on the same page?
That's okay.
Great. So you'll find that only allocation is different, but is provided to all employees. So therefore, in that case, that is non-discriminatory. Hope, are you with us?
Yes.
Great. So looking at that case, then that will take us to the next element here, which we are talking of passages. So we're having passages. So about passages. So where these are granted to expatriate employees, who are not Kenyan citizens, it shall not be taxed. We're saying where these are granted to expatriate employees who are not Kenyan citizens, who are not Kenyan citizens, it shall not be taxable. 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 These are another item that you want to look at here. These are points whereby you'll find that majority of the students, they normally tend to find it confusing, but after this, I know it will be very, very straightforward. So, on this case, you are talking of contribution to pension scheme. Contribution to pension scheme. Contribution to pension scheme. Contribution to pension scheme by employers on behalf of employees. Contribution to pension scheme. Contribution to pension scheme. Contribution to pension scheme by employers on behalf of employees. So this is what will happen. You'll find that I'm contributing probably to a pension fund, right? So what will happen is that employer will contribute for me, say like a half, assuming 5,000, and employee, myself, I'm going to contribute 5,000. This amount that the employer is contributing on my behalf to this contribution pension scheme, as much as it is a benefit. But this time round, we are saying it is an untaxable, benefit. It is an untaxable benefit. And that's the reason why you'll always tend to find, for example, if I was to take a good example of NSSF, you'll find that for NSSF, what normally tends to happen is that at this point, maybe for I told you to take the 1080, I contribute 1080, then the employer contributes 1080 on my behalf. So you'll find that the amount that the employee is contributing on my behalf, in this case, is going to be deducted from whatever I'm supposed to have as income to be taxed. So therefore, that's why we're saying that it is non-taxable. So you'll find that in this context, yes, it is a benefit, but this benefit, I'm not supposed to subject it for tax purposes. That is what you're referring to as contribution to pension scheme paid by the employer on behalf of who? Employee. Very important to note. Very important to note. Number 6, fringe benefits. Number 6, talk about the fringe benefits here. Fringe benefits. Fringe benefits. I'd already explained the fringe benefits, so no need of repeating it again. We had already talked of the fringe benefits, so no need of repeating it again. So, my good students, and this is a series I'm giving you for sure. You see, it's as if we are done with employment income. Why? Because whatever has remained, all these that we have put on notes, it is exactly the same thing that we are going to have in our format. All these that we have put in our notes, it is exactly the same thing that we need to have in our format, which later on you're going to see. So after that, my good students, we look at the final component before the format here, the tax credit. Talk about the employment income tax credit. 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 I know one will ask Mwalimu, now when you're talking about tax credit, what do you mean? Anytime you're talking about tax credit, ideally, what are we looking at here? You'll find that at this point, my good students, we are talking about the deductions or set of taxes. These are simply deductions, right? Or set of taxes. These are simply deductions, right? Or the set of taxes. Set of taxes, deductions or set of taxes. deductions or a set of taxes, deducted from gross tax liability, deducted from gross tax liability, deducted from gross tax liability to determine the tax payable, to determine the tax payable, to determine the tax payable, to determine the tax payable. For example, in this case, when you're talking of personal reliefs, right? There's a case that this should be dropped. I'm not sure how that will work. You read about personal reliefs, for example. Maybe you can talk about insurance reliefs, right? And the beauty part of this case, you'll find that based on the last financial year, of course, we are looking at 28,800. That is, of course, per annum. That is, of course, 28,800. That is, of course, per annum, which this one translates to simply 2,400 per month in Kenya. 2,400 per month. Insurance relief, also part of our tax credit. We normally tend to talk of it as what? We normally tend to compare, and this should be life insurance relief. We normally tend to compare the aspect of 60,000 compared to the 15% of the premium. Whichever is lower is the one that we normally tend to consider as our reliefs. And of course, withholding taxes, reliefs. Withholding tax, remember, these are literally the concept of tax at source, whereby these amounts were already deducted. So while computing my income, I'll have to do what? I'll have to remove them. So these are what you're referring to basically as tax credit. In a simple term, we are looking at this, we are talking of them as a set of taxes. So that maybe in the event that I was supposed to pay gross tax liability, for example, assuming I was supposed to pay a tax of 100,000, being credit, I'm going to reduce with a personal relief. If I'm having basically insurance relief, I'm going to remove, and any other item like withholding, so that the balance is what I'm going to pay as tax. And that's why you're terming them as what? As tax credits. That's why you're terming them as tax credits. That's why you're terming them as tax credits here. So, looking at that, my good students, it will be very, very important for us. It will be very, very important for us to understand now the graduated, individual graduated scale rate before we jump, because after this, as if you are done with this employment income, and you're going to agree with Mwalimu. After this, as if you're done with employment income, all the questions for employment income, and you guys will be my witness. Anything that we'll be looking at, it must fall amongst the nodes that we have now. It will always fall around the nodes that you're having now. Always. So it's just a matter of you knowing that these are allowable deduction, these are benefit. It will just be upon you to identify that, which will find it to be very, very interesting. So that is to say, by now, it's as if now we are done actually with employment income. So let us understand how to interpret the individual graduated scale rate here. Individual graduated scale rate. Individual graduated scale rate. It will be very important for us to basically understand this. And in this case, you don't need to cram anything. Why? You'll always be given. Check this one out. You'll always be given. Check this one out. You'll always be given. You'll always be given. You see, this bit here, the monthly taxable pay and the annual taxable pay. This one is as per our last financial year. Remember the Finance Act, of course, we have new amendments, but that one will not affect you guys. That one will not affect you. It will not affect you completely. So these are graduated scale rates, which allow us to learn how to study that. Talk about for yearly. You can see I'm having 1 to 288,000. 288,001 to 388,000, then excess of 388,000 here, right? The rate given, of course, we are having the rate given there as 10, 25, and 30%, 10%, 25%, and 30%. This is what you are given. I don't have to learn how to use this scale rate. So given this scale rate, my good students, how will you go about it? Assuming you're having this employee earning 1 million. Okay? This employee is earning 1 million. So to study this scale rate, we have the first bracket. This is our bracket number 1. The tax rate is 10%. So what are we going to do? We are going to have 288,000 times 10% to give us what? 28,800. And that's the reason why you'll find anyone earning below 28,800, you can't, or rather won't be having any amount that you're going to tax that person. Simply because in this case, you can clearly see that is below basically that, or rather this person is below, basically this is a 28,000 literally, 288,000 annually. If I told you having a person earning 288,000 annually, in this case, you'll find that the pay will be 0. You won't be having anything to pay as tax. That is the minimum amount. For monthly, we normally tend to talk about 24,000. Any person who is earning below 24,000, this person doesn't have anything to pay. This person doesn't have anything to pay as tax. Because if at all you check that, you'll find that the pay will set it off. So the amount, or rather the relief will set it off, so the amount pay as pay will be nil. The next bracket is between 288 to 388,000. You see this bracket? So how are we going to basically determine what I'm going to tax? This will be easy. You take 388,000 minus 288,000. That should give us what? 100,000 times 25%. That should give us a value of, you guys, you're having your calculator. That should give us 25,000. So I'm having 25,000 here. So on this context, excess of 388 is 30%. So this is what you can agree and say that the first 288,000, whatever the first 388,000, whatever that I'm supposed to pay as tax will be what? Will be 25,000 plus 28,800. So I'll be expected to pay 53,800 as tax. The first 388,000, I'll be expected to pay 53,800 as tax. We were taking this scenario, this person earning 1 million. So how do you go about it? I'll be having excess of 388 will be, excuse me, 1 million minus 388,000. This one is going to be subjected at the rate of 30%. So what will we be having here? 1 million minus 388,000 times 30% to give us 183,600. So as at the end of the day, the person earning 1 million, what will we be having as the gross tax liability? gross tax liability, I should be talking of what? 183,600 plus 53,800 to give us 237,400. This is the gross tax liability after considering our taxable income of that much. So this is where the component of tax credit will come in. This is where the component of tax credit, you see the one that we looked at, this is where the component of tax credit will come in. You'll say, this person is a resident. Remember last class, we had talked of the component of the concept of resident. So being a resident, therefore, I'm entitled to personal relief. Personal relief of how much? Currently is 28,800. And this one, see this one, you don't need to cram because this one you're given here. Look at this case. You don't need to struggle. You don't need to struggle. You don't need to struggle. You see, personal relief, this is what I'm given here. 28,800 per annum, 2,400 per month. You don't need to struggle. You only need to refer to the scale that you're given there. So I'm having personal relief, being a tax credit. Maybe I'm having insurance relief, being a tax credit, assuming 60,000 here, for example. So that as at the end of the day, whatever that this person is going to pay to KRA will be 237 minus 28,800 minus 60,000. You see? So the amount that this person is going to pay to KRA, I should be talking of 148,600. That is how the component of tax credit will affect us. That's how the component of tax credit will affect us. And basically, this is what we need to have or understand. So once you are done with this, it's as if literally we are through with what? We are through with the employment income. We are through the employment income. So after that, yes, Mercy, question?
A question.
Yes, please.
Oh, you've said it will not affect us for this exam, but for our own personal.
For practice, it is affecting us. Actually, from July this year.
Yes. So, so housing levy, will it be added as the deductions?
The housing, the 1.5, right?
Yes.
The 1.5 that will be added. Of course, in this case, remember this is whenever we are preparing our payroll, you'll find that among the deductions that we normally tend to have other than pay, which ideally we normally tend to have it later on. So you'll find that this 1.5 will also be added. It's going to reduce whatever that you're going to earn.
So will it be a tax credit at the end of the? It is
not a tax credit. This one is like like whenever we're preparing our payroll, right? So maybe you're having then you're having your income maybe to be taxed. That is of course the taxable income, assuming is at 2 million, for example. In addition to that, there is component of pay that you'll be having, right? Pay as you earn. And whatever that we've computed here, literally, this is pay as, maybe pay as you earn. These are tax that you're having. So in a pay as you earn, maybe assuming it will come of 2 million, maybe this is like 400,000. Then you'll be having your housing levy here. This will be what? Housing levy. This will be say like 1.5 of that. Maybe you can take off say like for the whole period, maybe 30,000, just an example. So that the tax component, this will be the tax component. This is what you're supposed to earn, right? For example, this person, he was supposed to earn 1 million, but you not earn 1 million. We are going to take 1 million, we deduct what? This component of 148,600. In addition to 148,600, I'll be having the housing levy, which is 30,000. So as at the end of the day, when you go home, you're going to go home with what? the 2 million minus 430, which in this case will be 230 minus 4. That is, of course, 2 million minus 230 to give us a figure of 1770. Take, for example, this case, whatever that we've done here with this example. This person, in this case, is being deducted housing levy, right? So I'd be having 1.5%. Of course, whatever that we know very well that the employer will contribute the same value to you. But in this case, whatever your contribution is 1.5. So I'd be having my 1.5%, 1.5% times 1 million in this case, I should be talking of 15,000. So this is a tax aspect of the tax liability. I'd be having the 148,600 plus 15,000. So that as at the end of the day, Mercy will pay the government 148,600 plus 15,000. So Mercy will pay the government 163,600. So if you are to go home with 1 million, you take the 1 million now, you less the component of tax, which is 163,600 plus the housing levy. So the difference is what you're going to go home with. That is now, if at all, we are to talk of practice.
Okay, understood. Thanks.
Is that okay, Mercy?
Yes, yes, I've understood.
Yeah, so this is now how it will affect. And that's why you find that the tax component, at the end of the day, is going to be deducted on whatever that you're supposed to earn. And that's why you'll find that it is different with these reliefs. If you realize that the reliefs will be assisting us to reduce what I'm supposed to pay. You see, initially, I was supposed to pay the tax value of 237,400. But because of these reliefs, they are going to reduce what I was supposed to pay, the gross tax liability, up to 148,600. So they are not the same as the housing levy. These are reliefs, these are component of tax. I hope that is clear now, Mercy.
Yeah, I've understood that the housing levy actually increases the tax we are going to pay. So it can't be approved. Yeah, thanks.
Welcome. So that is what you're supposed to do. So after that, the next item that you're supposed to have here is basically the format. And my good students, you're going to agree with Mwalimu that the format that I want us to look at right now, it is exactly the same notes that we had. You see the notes that we are looking at? Exactly the same concept that you're going to apply here. Exactly the same concept that you're going to apply here. So take, for example, this case, maybe I'm having hope. Taxable income, that is a computation of taxable income for the year ended 31st December 2022. So this is the format that I want us to look at. There is this first value, which of course we are going to talk of as what? As basically our basic salary. So we are having our basic salary. Talk about our basic salary here. Basic salary. And on this basic salary, I'll want to be very, very clear on this. I'll want to be very, very clear on this. My good students will find now for the purpose of exams, okay? Examiner will tell you that basic salary, I'm having, say, like 2 million. Then he will give you these statements. Number one, he'll tell you aspect of net of pay, say like 500,000. The same statement, basic salary, 2 million, pay deducted. $500,000. Then the same statement, 2 million, pay 500,000. Three different statements that you're looking at here. Three different statements that you're looking at here. The first statement is 2 million net of pay. The second statement, 2 million pay deducted. The third statement, 2 million pay 500,000. This is very important, and kindly make sure that you grasp this very clearly. In this first case, the basic salary that I'm supposed to take here, I'm going to take 2 million. We add pay. That is to say, pay was not included in the basic salary that I'm having. So therefore, in this case, I'll be having what? 2.5, my basic salary here. The second statement, pay deducted. That is to say, my basic salary again, I'm going to add the pay that was deducted. So that my basic salary, I should be having 2.5. They want to be disclosed here. The third statement, I'm given 2 million, then just pay in bracket. Whenever I'm given this in the case of exams, it means that the 2 million is inclusive of pay. So therefore, the basic salary that I'm supposed to take is what? 2 million. Very important for you guys to always master that. Very important for you guys to always master that. Always identify what you're given. The first case, net of pay. That is to say, pay is deducted on this. Pay deducted, that is to say, this is not inclusive of pay. Pay, you're just given pay. That is inclusive of pay. So tell what I'm going to have here, make sure that you identify these statements. It will really help us. It will really help us. So once we have that, we consider now benefits and allowances. Benefits and allowances. Benefits and allowances. Benefits and allowances. We consider the benefits and allowances there. So how will you do that? This will be easy. Exactly what we had looked at, starting from the cash benefits, non-cash benefits. We'll all consider them here. Maybe I'm having, say, like hardship allowance, for example. That is our benefit. Put it there. Maybe I'm having, say, like water and electricity. Put it there. Maybe I'm having, say, like cook and watchman, whatever I was paying, we put it there. Maybe I'm having furniture. Furniture, we said, we take 1% per month times the cost of the furniture. We put it there. Telephone, we said we'll be having 30% times the telephone bill. We put it here, right? We talked about the aspect of motor vehicle benefit. We said I'll be comparing the CC rating of the motor vehicle. I compare with 2% per month on cost of the motor vehicle. Whichever is higher is the one that you're going to consider as our benefit. We put it there. For example, maybe in this case, I'm having medical benefit. the medical benefit that I'm supposed to put here is none, or rather in this case, if it is discriminatory. Discriminatory. If it is discriminatory, I'm supposed to put it here. If it is non-discriminatory, we are not supposed to put it here. Only discriminatory. And that's why we mentioned discriminatory is non-taxable. Or rather, discriminatory is non-allowable, basically non-deductible. Then, in this case, of course, we'll also be talking about what? The aspect of school fees. School fees in this case, if it was not charged in the books of the employer, so therefore I'm going to put it here. Talk about per diem. Whatever that I'm supposed to put here is excess of 2,000 shillings per day. Excess of 2,000 shillings per day is what we are going to put it there. You can clearly see whatever that I'm having here in our statement, we are just copying and pasting the notes that you had. And that's why I mentioned what we wrote the other time was very important. So per diem, excess of 2,000 per day. Maybe I'm having contribution to pension scheme paid by the employer. We mentioned this is what? Non-taxable. So therefore, you put a dash there. You put a dash there. Contribution, or rather insurance premium. Insurance premium paid on behalf of the employee, on behalf of the employee by the employer, we put it here. You see? So literally, and all the benefits that we had. So consider, lastly, our housing benefit. Consider our housing benefit. For housing benefit, it would be vital for you to identify if you are dealing with whole-time, non-whole-time, or agricultural employee. That one will be very, very important for you to consider that. That one will be very, very important for you to consider it. So, housing benefit, this is what we mentioned. We take 30% of, this is not 30, but 15% of employment income. %15% of employment income, literally, this is what we are talking about. You take all of this up to this point, that is your employment income. You determine the 15%. You compare with the market rental value. Market rental value here. Whichever is higher, you less own contribution. You less own contribution. Whichever amount that the employee was contributing. So in this case, I'd be having what? My housing benefit there. So that as of the end of the day, I'd be having our income there. Consider our contributions now. Allowable contributions. Consider allowable contributions, like what? Maybe pension contribution. We compare the actual and the set limit. Set limit for pension, we've said, is to 40,000. We compare with our actual. Whichever is lower, whichever is lower, whichever is lower is what I'm going to have it here. Compare your home ownership savings plan. Set limit 96,000. You compare with the actual. Whichever is lower is the one that you're going to take it here. You have your mortgage. Set limit, mortgage interest. Set limit 300,000. You compare with actual. Whichever is lower is the one that you're going to consider it here. So all this we are deducting from the value that we are having here. As at the end of the day, this will give us taxable employment income. Taxable employment income. Taxable employment income, I'd be having it at that point. Excuse, taxable employment income, I'll be having it at that point. What if this person had other incomes? What if this person had other incomes? Make sure that you're done with that point so that you can erase and we look at it. What if this person had other incomes? How will you consider that? Because there are situations that you can literally get that. There are situations that you can literally get that. So how will you go about it? How will you go about it? Allow me to erase here. If this person had other incomes, then this will be easy. We are going to take the other incomes here. Other incomes. For example, maybe this person had rental income. You take your rental income, you take your gross minus allowable expenses. We have it there. Maybe this person had other investment income like interest. Interest income, for example. The interest income that you'll be taking here, basically, this is what? Non-qualifying. Remember, we had talked of this. Non-qualifying interest. We have it there. And any other income that this person will be having. And any other income that this person will be having. So that as at the end of the day, my good students, we are going to determine, therefore, our total taxable income. Total taxable income. We are going to have our total taxable income at that point. That is to say, we take our taxable employment income, we add other incomes to determine our total taxable income. Swali jamini. Any question? Any question? That is very, very important. Whatever that we've done now, literally it is a summary of everything that we need to know on employment income. Whichever paper that you are going to take, whichever sitting, whatever that is going to come, here it is, everything. From step 1 to the last step. So that even if you take a paper like this for employment income, it just be a matter of you to basically identify this, I'm supposed to put it here, this I'm supposed to put it here. And literally the format of presentation. Because the beauty part with tax is that they are going to mark the entries. So as many correct entries as you have, the better for you. And Morimu has given us the secret of employment income. So tomorrow, when you'll be looking at a question, literally you'll find that it will take us not more than 10 minutes to do a question. Maximum probably 15 minutes. So long as you're having this concept. It will not take us more than 20 minutes, maximum of 20 minutes to do a full question for employment income. So long as you have this and you've gone through the notes. And you know very well that for the purpose of for exams, this is a must-come question. Employment income, it is a must-come question. Any question, guys? Okay. To that point, you guys have a good night. We meet tomorrow. We clear this employment income and introduce another thing.